Ice water turn Atlantic. Night calling in a phantom. Told them, hold it, don't you panic. Took an island, felt the mansion. Drop the roof, more expansion. Drive a coupe, you can stand it. It's undercover. I'm an ass and titty lover. Guess we all meant for each other. Now that all the dogs free, and we out in these streets. Can you do it? Can you pop it for me?
Pull up in a demon on guard. Looking like I still do fraud. Flying private jet with the rod. It's that Z. It's that Z. Pull up in a demon on guard. Looking like I still do fraud. Flying private jet with the rod. It's that Z. It's that Z.
Blow the brains out the coop. Polly one on top, but I'm on mute. I'ma bust her wrist down cause she cute. Car on the yacht, I've been a pool. She an addict for the lifestyle in the paddock. Daddy, have you ever felt Chanel fabric? I be dripping to death, I need a casket. And we got more strikes in the rough, he foul tech him. In the middle of the field like David Beckham. I'm unlocked up for real, I'm trying to help him. When I got a meal, got me the chills, don't know what happened. Pop, do what you feel, I'm on that zombie. I'm more like Gaddafi, I'm not no Gandhi. I'm more like I'm David Goliath running. Be cloning, I find it funny. Clone. We finna know, straight out the dungeon. Finna know. I go in the mouth, because of me nothing. 300 the watch is out of your budget. 300. Mean muggin' got me clutching. Yeah, and this stick right out of Russia.
Ice water turn Atlantic. Night calling in a phantom. Told them, hold it, don't you panic. Took an island, felt the mansion. Drop the roof, more expansion. Drive a coupe, you can stand it. It's undercover. I'm an ass and titty lover. Guess we all meant for each other. Now that all the dogs free, and we out in these streets. Can you do it? Can you pop it for me?
Pull up in a demon on guard. Looking like I still do fraud. Flying private jet with the rod. It's that Z. It's that Z. Pull up in a demon on guard. Looking like I still do fraud. Flying private jet with the rod. It's that Z. It's that Z. In a Hellcat cause I'm a hellraiser. Self-made, I don't owe a damn favor. When you get that money, keep your heart. I'm sliding in a coupe, ain't got no key to start. I got to follow me in BET Awards. When your well run dry, you know you need me for it. When I pull up in a Buick, you know what I'm doing. If the police get behind me, fleeing any lure. Sleeping on the pallet, turn me to a savage. I'm a project baby, now I stay in Calabash. Like I still serve fiends, like I'm still jacking. I be sipping on, trying to keep balance. Hit that Z-Walk, dicky with my Reebok. I don't say much, I just let the heat talk. Your jewelry water whoop, diamonds like re-rock. My little baby ride that like seatlock. When I stepped up on the scene, I was on a beam. When I jumped up out the beam, I was in Celine. Baby girl, you just a fleen, that ain't what I mean. Money busting out my jeans like I do skiing. Pull up in a demon on guard. Looking like I still do fraud. Flying private jet with the rod. It's that Z. It's that Z. Pull up in a demon on guard. Looking like I still do fraud. Flying private jet with the rod. It's that Z. It's that Z.
Ice water turn Atlantic. Night calling in a phantom. Told them, hold it, don't you panic. Took an island, felt the mansion. Drop the roof, more expansion. Drive a coupe, you can stand it. It's undercover. I'm an ass and titty lover. Guess we all meant for each other. Now that all the dogs free, and we out in these streets. Can you do it? Can you pop it for me?
Pull up in a demon on guard. Looking like I still do fraud. Flying private jet with the rod. It's that Z. It's that Z. Pull up in a demon on guard. Looking like I still do fraud. Flying private jet with the rod. It's that Z. It's that Z.
Blow the brains out the coop. Polly one on top, but I'm on mute. I'ma bust her wrist down cause she cute. Car on the yacht, I've been a pool. She an addict for the lifestyle in the paddock. Daddy, have you ever felt Chanel fabric? I be dripping to death, I need a casket. And we got more strikes in the rough, he foul tech him. In the middle of the field like David Beckham. I'm unlocked up for real, I'm trying to help him. When I got a meal, got me the chills, don't know what happened. Pop, do what you feel, I'm on that zombie. I'm more like Gaddafi, I'm not no Gandhi. I'm more like I'm David Goliath running. Selling out, straight out the dungeon. Selling out, hey. I go in the mouth, because of me nothing. 300 the watch is out of your budget. 300. Mean muggin' got me clutching. Yeah, and this stick right out of Russia.
Ice water turn Atlantic. Night calling in a phantom. Told them, hold it, don't you panic. Took an island, fled the mansion. Drop the roof, more expansion. Drive a coupe, you can stand it. It's undercover. I'm an ass and titty lover. Guess we all meant for each other. Now that all the dogs free, and we out in these streets. Can you do it? Can you pop it for me?
Pull up in a demon on guard. Looking like I still do fraud. Flying private jet with the rod. It's that Z. It's that Z. Pull up in a demon on guard. Looking like I still do fraud. Flying private jet with the rod. It's that Z. It's that Z. In a Hellcat, cause I'm a hellraiser. Self-made, I don't owe a in favor. When you get that money, keep your heart. I'm sliding in a coupe, ain't got no key to start. I got to follow me in BET Awards. When your well run dry, you know you need me for it. When I pull up in a Buick, you know what I'm doing. If the police get behind me, fleeing any lure. Sleeping on the pallet, turn me to a savage. I'm a project baby, now I stay in Calabash. Like I'm still surfing, like I'm still jacking. I be sipping on, trying to keep balance. Hit that Z-Walk, dicky with my Reebok. I don't say much, I just let the heat talk. Your jewelry water whoop, diamonds like re-rock. My little baby rock that like seatlock. When I stepped up on the scene, I was on a beam. When I jumped up out the beam, I was in Celine. Baby girl, you just a fleen, that ain't what I mean. Money busting out my jeans like I do skiing. Pull up in a demon on guard. Looking like I still do fraud. Flying private jet with the rod. It's that Z. It's that Z. Pull up in a demon on guard. Looking like I still do fraud. Flying private jet with the rod. It's that Z. It's that Z.
Hello everyone, my name's Dean, let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is March 17th, 2023. And it's finally happening. It is finally happening. There's so many things, so many benchmarks in the price action that we'd been waiting for, that we've been really excited about, but this is another one of them. This is a big one. What am I talking about? I'm talking about the break of this level right here. This level as designated on this chart by this dotted line. We're going to zoom out in a second so you can see exactly what I'm talking about, why I drew this there, okay? It's not about just drawing random lines on a chart. It's about having your chart set up correctly on the log scale or on the arithmetic scale, and also having those support and resistance lines, or diagonal or orthogonal or horizontal, whatever you want, having them mean something, having them represent previous price action faithfully, okay? It's all about that. So we're going to show why we drew this and how this is a massive deal. It's a big fucking deal, okay? So we're going to talk about that. We're also going to talk about what the DXY is doing, okay? Because understand that none of this happens without the DXY. And for those analysts who believe, speculators, analysts, whatever, who believe that it's all about the macro, it's all about what's happening in the news, in some ways they're correct. How are they correct? Well, we're going to talk more about that. But I'm going to show you how definitively, without question, you can just be a technical analyst, just be a technician of the charts, just look at chart patterns and price action and reach the same conclusions, if not more accurately. Okay, so we're going to talk about all of that today. Guys, please like, share, and subscribe if you're getting value, if you've gotten value in the past from these streams, and let's move forward. Okay. So, let's start off on, let's stay on this hourly time frame. Okay, we're looking at Bitcoin. Let me erase this. Okay, I put this in for the thumbnail. And this is what we're looking at. Okay, this is the pattern. This is the price action that we're most interested in. Okay, for the past few weeks, Bitcoin has done this. Okay, it's put in this pattern right here. Some people call this a megaphone pattern. Yeah, you can look at it as that, but it is very bullish because you have essentially a well-defined range. Okay, it's a broadening wedge, a well-defined range in terms of support and resistance that the price is respecting. Moreover, it's bullish quite simply because this right here, this whatever you see here, this burgundy zone represented previous resistance that was broken, now flipped to support in that move right there. Okay, so because we're above crucial resistance, you can call everything up over this level bullish. That's really bullish, especially given the fact that you come down and you have a very, very violent, strong reaction from this support area. Okay, that's basically the chart telling you, okay, great, I've exhausted all selling below this area. Okay, and we know this area represents Bitcoin's accumulation during the bear market. Okay, a lot of people think we're still in a bear market, and that's fine. But understand, technically speaking, the bear market was left behind once we broke this burgundy area. Let's zoom out for those of you who may not be familiar with this chart and my annotations. This is what I'm talking about. Okay, bear market consists of not only the drawdown, okay, which is from 69K all the way down here to around 18K. Then we started doing an accumulation. Okay, you can call this a Wyckoff accumulation. You could call it 2 degrees of AB basing and a pivot. Anyway, you have to accumulate the supply dumped on the market at a lower value before you start marking up. Okay, so that's what we did, and we have our price action delineated or circumscribed in this falling channel, this burgundy channel. Okay, so that happened, and we obviously broke that. So what's really important about this is the fact that from an Elliott wave perspective, it's quite clear that this represents a wave 1, wave 2 situation. We've talked about this on the channel very clearly. This is quite obvious to be an impulse. Okay, when we talk about impulses in Elliott wave theory, we talk about 5 waves up, a trending pattern, and it has the look. It looks parabolic, all that stuff. Okay, so this is an impulse. Why are we saying this is wave 1, wave 2? It's because the time it took for this and the time it took for that are about the same. And typically in Elliott wave theory, wave 1 and wave 2 take about the same time. Also, you have wave 2 come typically between the 382 and the 618, where typically between the 0.5 and the 618 Fibonacci retracement levels, and that's what you saw. Okay, we know that wave 2 can retrace as minimally as the 382, but typically it retraces down to the 0.5, and that's exactly what you saw right here. Okay, so you can call it, I mean, it doesn't matter. Good analysis is good analysis is good analysis. It doesn't matter what tool you bring, what style of analysis you want to use. If it's sound, if it's syllogistically consistent, it's going to echo other forms of analysis, right? Bad analysis is bad analysis. Learn to recognize them. And when you're doing your technical analysis, don't be shy about bringing to bear different things you may have learned along the way, because if your analysis is good and sound, it's only going to be corroborated by other forms of analysis. So here you have wave 1, wave 2. Also, like I said, some people are seeing this as a megaphone pattern. Both are true, okay? But you can kind of allay any confusion as to what this is. Is this a bearish thing or is this a bullish thing? Quite simply, using basic support and resistance, you know that this is bullish because this was resistance. For 250 days, you accumulated and you broke this to the upside. You broke significant resistance and you retested it as support. This is automatically bullish, okay? One of the things that underpins all good technical analysis is good support and resistance. Support and resistance. You have to know support and resistance. I always say on this channel, my mentor, Jack Schwager, writes a series of books called Market Wizards. In the Market Wizards series of books, he interviews all kinds of different traders, short traders, long traders, position traders, scalp traders, swing traders, traders that work at prop firms, traders that are independent. It doesn't matter. One thing they all have in common is when they're in that Market Wizards series, by the way, they're considered successful traders. They have a 10-year minimum track record of success. What underpins, or what they all have in common is a good understanding, a good to great understanding of support and resistance. Whatever you want to study, whatever you want to specialize in, master support and resistance. And if you don't do that, you're always going to be like, well, it can go up, could go down. You're always going to be confused. You're always going to be hedging. You're always going to be lost. Support and resistance is where it all starts and ends. Okay? I talk about Elliott Wave all day, but support and resistance is crucial. Okay? So when we're talking about support and resistance here, this is an RS flip, what we call resistance flip to support, RS flip. Boom. That is bullish. Everything above here, by definition, is bullish. So we can now look more closely at this impulse right here. Okay? And this, to me, again, has the right look, quote unquote. I'm referring to Prechter and Frost, the wave principle, for those who may be confused. The right look means trying to identify an Elliott wave impulse. Typically, you can do so just by looking at it. It looks impulsive. That is this, okay? This looks impulsive. So if it is indeed, we can start looking at it and trying to identify 5 waves. And I did that yesterday. I'm not going to repeat that analysis, but it's 5 waves up, 3 waves down. It takes about the same time to go up as it does down. The retracement is a minimal retracement to the 382, and we know that that is actually not out of the ordinary, given that this would be a wave 3. And what do we know about wave 3 in Elliott wave theory? Is that wave 3 is typically the most impulsive, the most intense, the most vicious and violent of the Elliott waves, right? Again, wave 1, wave 2, then that's the start of wave 3. So if you see yesterday, the title of the live stream was the most bullish retracement possible. Why? Because this is exactly what you're seeing here. You're seeing shallow retracements. Shallow retracements mean there's too much buy pressure for price to go any lower. So it's going to go down as little as it possibly can to do the job. Okay? And what was the job here? The job for price was to retest previous resistance as support. We know that. That's a principle of technical analysis, and that always is the case. It always will be the case. So here, if you look, you broke this resistance as designated by this teal box, right? You have all this price action, Mind you, guys, we're however many minutes into the analysis. We haven't touched one indicator. Indicators are your friends, but don't be overly reliant on them. Because if you are, 9 times out of 10, you're going to miss the forest for the trees. Figure out what's going on, get a good idea, then bring in your indicators. Don't go backwards. Too many indicator traders out here who don't know what they're talking about, who are inconsistent as a result of not having a good handle on price action. So don't do that. If you want to go far, you can do stuff with just indicator trading, but you will stifle your development, you will stifle your growth, you will cap your potential as an analyst. I promise you. Second, you don't have that indicator, you can't read shit. And even with that indicator, sometimes, especially during consolidations, you're going to get mixed signals and you're going to miss a lot of reads. All right. So the idea is, all we wanted to do here was retest all of this. You see all this activity right here? You could say that this teal box represents the mean of all of this activity. Okay? If you were to take all this activity and just, and I'm being really, I'm eyeballing it, okay? Just eyeball it. All this activity, where's the mean? The mean of all this activity is around here somewhere. Do you see that? You don't need an indicator to do that. You can be more specific. You can bring out your VRVP or VPVR, whatever you want to call it, and be a little more specific. But generally speaking, do you see how that works? So you're breaking that and you're retesting that. Job done. Can you retest it again? Absolutely. But essentially, the job of retesting crucial resistance as support was done. This gives you confidence to say, if price continues from here on out, nothing is out of the ordinary. It doesn't, it works. Do you see what I mean? Like all the buyers and sellers are happy because everybody was given a fair chance to buy at all the different levels. Okay, so that's the idea. Basic brass tacks. Now, this is what we want to talk about today. This dotted line right here. It's everything. Most channels today are going to be talking about the 200-day moving average or some other moving average or some other indicator 5,000 that tells them that Bitcoin's a super buy right now and we're about to get a massive pump. And that's all good and well. But on this channel, I really want to stress the main thing is that you do not want to get lost by using indicators and not seeing the simplicity of the analysis, the simplicity of the charts. And what's so simple about it? The fact that since January 25th, we've put in a very clear level of resistance in Bitcoin's price action, right? As designated by this line. Every single time this uptrending diagonal was hit by the price, we found resistance. Okay, so since January 25th up until present day, that represents approximately 55 days. So about 2 months. Every single time in those 2 months we hit this line, we got rejected. Okay, now what is happening? So this is why I circled this in the thumbnail. What do you see here? It's not only about breaking resistance. I always say it's about retesting. Any level is only broken and conquered once it's retested. So you go on the smaller time frame and what do you see? You see that indeed you did break that right here. As soon as we broke 26K thereabouts, that was the first step. Now what we want to see is this previous resistance of 60 days retested as support. Okay, so we have one retest here. Maybe we get another one, but that's the idea. Okay, that is the analysis. It's that simple. The analysis is we're RS flipping. We're flipping previous resistance, this 55-day resistance into support right now. This is why the alarms are ringing and you're really bullish. And we're going to turn on the indicators in a second, but the indicators are essentially, all they're doing is they're taking that information and they're translating it into a buy or sell signal or a break of a moving average or whatever. Do you understand? So let's go on the even smaller time frames and see what's going on in this region right here. In this region right here, okay? Guys, if you're getting value, please like, share, and subscribe. So, one break, okay, a break, and a retest in 3 waves. You can clearly see that, okay? 1, 2, 3. This is the beauty of reading price action, because when we see these 3-wave movements, 3-wave retracements, we know they're corrective, right? You see that very clearly. This is a zigzag. 1, 2, 3. Now, was that sufficient? That's the question. I would not be surprised if it happened again, but that may have been it. Okay? So let's now look at the context of this break and this retracement. So the context is in this right here. You clearly put in some sort of inverse head and shoulders, right? A reversal pattern. And that's after you put in this retest of this crucial level right here. So you had a series of consolidations that yields a bullish reversal pattern. We know the inverse head and shoulders is a bullish reversal pattern, and it's confirmed upon break and retest of the inverse head and shoulders, okay? So in this somewhere here, you got a break and a retest. I think that's the break and that's the retest right there. And this is the resulting move. This is the cause. This is the effect, okay? So this is the beginning of the context. Next, we can actually look at all of this right here as an impulse, okay? So let's pull a Fibonacci retracement level on this. Why Fibonacci retracement? Is because, actually, you know what? One can even say that the impulse starts here. The impulse may start here. Let's see, 1, 2, 3, 1, 2, 3. Yep. I'll say the impulse starts here. So what I'm going to do is I'm going to pull my Fibonacci retracement level from here all the way to the top here, okay? Because I'm basically seeing all of this as my impulse, and I know that if I have impulsive price action, I'm going to find retracements, intra-wave retracements, and I know the nature of all the different intra-wave retracements, right? I know that wave 2 retraces to the 0.5 to the 618, or anywhere between the 0.382 to the 0.618. I know wave 4 retraces between the 236 and the 382, right? I'm using my skills in Elliott wave theory and the relationships in the Fibonacci retracements in all the different waves, okay? So I would say wave 2 is here somewhere, and perhaps, so let's pull out our Fibonacci extension tool to see where wave 3 could possibly be. Okay, I am seeing wave 3 would typically end. Let me erase this for a second. Let me get rid of this so you guys can see what I'm seeing. It's a little messy. So if you take this purported wave 1 retracement of wave 2, what you can see is this, that there is no like typical wave 3 between 1618 and 2 Fibonacci extension. So what does that tell you? That tells you that wave 3 is more likely than not extended, okay? Because wave 3 ends up between the 1618 and the 2 Fibonacci extension. If it's a truncated wave 3, it'll end up at the 1 Fibonacci extension, but we didn't get that. So if anything, we've got on our hands an extended wave 3, okay? Is this the end of wave 3 right here? Perhaps, maybe not, maybe it's this. Do you understand what I'm saying? So what I'm seeing is that we're in impulse. It's very likely that we're in impulsive price action. This may be the wave 3 right here and wave 4. And then this may be the... No, but you can't have an extended wave 5. Do you see? If you have an extended wave 3, you can't have an extended wave 5. So what's more likely than not is that all of this is wave 3. And what you're going to get here is a wave 4 that's typically a flat, right? Because if wave 2 by the guidelines of alternation in Elliott wave theory. When you have a simple wave 2, you typically have a complex wave 4, okay? Wave 2 simple, wave 2 is typically simple, wave 4 is typically complex. Wave 2 typically sharp, wave 2 is typically sharp, wave 4 is typically flat. Okay? So you have the law of, or it's not a law, it's a guideline of alternation, okay? It's a pattern that we see over and over and over again. This is why we use it to help make sense of these wave impulses that we work with in Elliott wave theory. That being said, in layman's terms, in plain English, don't be surprised if what you're seeing here is something like this. You have a chance, an opportunity in this flat correction to really own this level. Because this is not just a run-of-the-mill level. And it's unlikely, it's very unlikely that what you're going to get here is a simple kiss, goodbye. No. 55 days worth of resistance that you just broke. You're going to have to pay it. You have to pay it respects. You have to adequately establish some sort of dominance. I don't know how to express this. Do you understand what I'm saying? Like, because this is 55 days, this is a big fucking deal level. You're going to have to retest it in some substantive way. Okay, so I won't be surprised if what you're dealing with is 1, 2, 3, 4, and then a wave 5, and then once this goes, you get a regular wave 5, and then a retracement. Obviously, so let's mock this out. Okay, just based off of what we're seeing here, guys. If you're getting value, please like, share, and subscribe. Based off of what we're seeing here, I think it's highly likely that we see something like this. Okay, and so because we have an extended wave 3, we should not expect an extended wave 5. Typically, you just get one wave extension, okay? And let's take our Fibonacci retracement tool really quickly and see this. Look at that. Look at that. Look at that. Who knows what I'm looking at? Who knows what I'm looking at? Akanksha says, hi, what's up? What's up, Akanksha? Akanksha says, this is a bullish retest. I believe so. I do believe this is a bullish retest. Really bullish. Who knows what I'm looking at right here? Basically, I just pulled the fibs from the bottom of wave 3 to the top of wave 3 and look at where the Fibonacci retracement level is. This is why we study these things. This is why you study your relationships, your Fibonacci levels, and all that stuff. So many people who may not know anything about Elliott wave, and everybody uses Fibonacci, I think. Most people, it doesn't matter what style. The power of Elliott wave and its ability to discern special, precise aspects of corrective and impulsive waves is unmatched. Because a lot of people use Fibonacci relationships, but just ad hoc. They just use them almost randomly. Like, golden pocket for them is anywhere between 0.5 and 786. It's very random. It's not random, but it's not random. Random's not the word. It's very, like, broad brush. It's not very precise. People throw Fibonacci's everywhere, and they say, oh, this hit this level, and that hit that level, but the levels don't have any significance. This is the beauty and the power of Elliott wave theory. These levels have significance. And so when I pulled the Fibonacci retracement level from the bottom of this wave 3 to the top of this wave 3, and I see that this retracement hit the 0382, to me that says, yes, Dean, you're very likely dealing with a wave 4 retracement, because we know wave 4 typically retraces to between the 236 and the 382 of wave 3. Okay, so this is how, this is the difference between some channels that purport to practice Elliott wave and literally give you every permutation and combination of different waves that may or may not be, following any kind of guidelines or rules or principles, and a channel that kind of has an idea of the guidelines and principles where if you apply them, you don't have a million different options for every last read. Okay, if you're doing Elliott wave and you have 50 different options for what the price can do, you're doing it wrong. Because when you figure these relationships out, it really narrows your options. Doesn't mean you can't be wrong, but it narrows your options. And it gives you a little more chance, a lot more chance rather, to be precise and to be right more than you're wrong. Okay, so high likelihood that this is a wave 4 correction, and that not only is this a wave 4 correction, but another thing we can do here is, because we have waves 1 through 3, and we're likely looking at wave 4, we can project wave 5, okay? And because we can project wave 5 with a degree of accuracy, okay, let me relax. We can be that much more accurate in projecting wave 5 because wave 3 has extended. Okay, if wave 3 were run-of-the-mill and just normal, then wave 5 could very well have been extended, and there's no projecting an extension. Okay, but what we can do now, given that we already have an extension in wave 3, it's unlikely that you get an extension in wave 5. What we can do is we could take wave 3 and the retracement of wave 4, which is likely to be capped to the downside at the 382, which is confluent with our 55-day support line, right, that we just broke, and then project wave 5 to the 0618, which would be about 27.5, okay? 27.5. Sometimes wave 5 after an extension can come all the way to the 786, but let's just say, right, conservatively, you get wave 5 coming to about 27.5. Okay, so this would be a very likely scenario. Now, after this, what should you expect? As usual, you should expect a 3-wave retracement back down to between the 382 and the 618. So, yet another opportunity to lord over that region. Do you guys see what is going on? This is a high probability read. It's a high probability read for the reasons I've stated. There's a difference between just drawing random lines on a chart and using probabilistic scenarios that not just me, but people in history have studied over and over and over again, have studied and identified over and over again, identifying them yourself and then putting them together. This is the power of good analysis. I don't know, I can't speak for other sort of styles of analysis, right? But I know, at least in Elliott wave, if you learn it right, it's almost like you're cheating. If you learn it right, it's almost like you're cheating. And it actually, was it Frost? I think it was AJ Frost. Towards the end of the wave principle, he does some projections, and then there's certain people who are like, yo, how the hell did you know that? Like, he would project certain moves like a decade out. And then, like, these guys are old, so they had time to see, right? They're playing with the stock market, Dow Jones Industrial. And in a decade, sure enough, exactly what he projected using Elliott wave analysis came to pass. And people are like, dude, that's cheating. And it's just like technology. Good technology, it's said to be indistinguishable from magic. Good analysis is sometimes indistinguishable from sorcery. Don't let people tell you nobody knows. It's impossible to know. That's because they don't know. Study. There are people in history, and now I'm not talking about Elliott wave theory, I'm talking about Gann analysis. I don't know much about Gann analysis, but I know W.D. Gann historically, and I've studied about him as a personage, as a historical personage. He was a wizard. He was a market wizard, and he made a ton of money, probably the most lucrative trader, one of the most lucrative traders ever. And he did all his stuff by hand, and he used his Gann analysis to make these projections, right? So when people say it's impossible, that's for them. If you're an analyst and you're serious about technical analysis, and you think that there's something here, don't be dissuaded, right, by what's possible. You can get to a level where you're winning a lot more than you're losing. And, you know, what Gann was doing in terms of his win rate was like 83%. That's back, no trading view, no indicator 5,000. He was just doing his Gann analysis by hand. So don't sell yourself short. Don't be negative about the prospects and the heights that you can reach with good technical analysis. And you can get better and better and better and better and better if you stay with it. If you're really serious about it, really passionate about it, the sky's the limit. I promise. You see me on this channel, I get a lot of shit wrong, but there's a lot of stuff I get right. Okay? And not just that I get them right, it's how I get them right. Right? In terms of the timing, in terms of the moves, right? In terms of what's corrective, what's impulsive, all that stuff, right? Obviously, we're dealing with a lot of different assets, but you know, you can do better. You know, I don't know who you are. I don't know what you're doing. You may be the next W.D. Gann, or the, you know, I don't know if Ralph Nelson Elliott was personally that great at analysis and trading. But anyway, I digress. So I think with a high degree of probability, right, that you're going to see something like this. Okay? And again, we can, with a high degree of probability, give a time. Once we get this wave 5 printed, all we're going to have to do to estimate the time projection on this is, okay, if this took 1 day and 12 hours, this is likely to take around the same time. I don't know how long wave 5 is going to take, okay? But I'm just going to assume it's 1 day, 12 hours for this example. Let's just say it takes around the same time, right? And would you be surprised if this took you to the weekly open of the DXY, right? Do you understand what I'm saying? Like, everything's so confluent. Like, if we got this wave 5 here towards the end of the trading day, and then we started doing our ABC correction, perhaps we do something like this, and by the end of, or the open of the DXY on Sunday, we may reach this bottom once again on this previous resistance, this 55-day resistance turned into support. Like, that is a trading plan that I would be very comfortable in. Now, do you just close your eyes and trade this to the dollar? No. You put this as a template, as a what is a highly probable that can happen, and then you wait and see, and you adjust it accordingly. You fine-tune it with more data, right? So that's the idea. Okay, so that's Bitcoin. This is what I think is happening. This is what I think can happen, and why. Okay, I do believe the takeaway message is that this level right here, this 55-day resistance that we just broke, is going to be held. Not only is it going to be held, it's going to be retested. As I said yesterday, it's not, people are very, very, people make a lot of, a big deal about breaking levels. It's not about breaking the levels. It's about retesting them. Everything's in the retest. The strength of a move is in its retest. This is cool, but this is where really you confirm the veracity of that move. So we'll see. And I would not be surprised, like I said, if this happened during the weekend. You just do one of these, confirm it, and then we're off. Okay? And I mentioned earlier in the analysis that a lot of people are talking about different indicators and different moving averages. And let's just turn on our main moving averages on this channel. I use EMA's exponential moving averages, and they're all Fibonacci numbers. 200 is just an arbitrary number. I think there's a lot of kind of monkey see, monkey do, right? Somebody used the 200 moving average and then posted on Twitter. It got viral. Now everybody uses the 200 moving average. I like to use these Fibonacci numbers because there's a mathematical significance to the period. Okay, 21, 55, 89, 144, right? You can look at a chart of all the different Fibonacci numbers. And because they occur so regularly in nature, I don't know exactly why, but I'm going to rely on mathematical occurrences in my periodicity for my moving averages. Okay. Anyway, going on a higher time frame. Let's see, weekly time frame. Okay, so on the weekly time frame, let me get rid of this. On a weekly time frame, you can see that we have some moving averages, the 89 and the 144, right where right where we assume this wave 5 is going to end. Okay, that 89 and 144. So wouldn't be surprised if that happens. Wouldn't be surprised if this 50-day moving average, this blue one, came up to this level, right? On the weekly time frame. Let's see on the daily time frame if we can't see more confluence. So the daily moving average, you're above all the moving averages. This is what's so bullish about Bitcoin right now, is this: you're above all the main moving averages. If you're just an indicator trader and you're looking at moving averages, like, you're above on the daily time frame all your main moving averages. You literally have to go see on the monthly time frame. Look at this. On the monthly time frame, your 21 exponential moving average is all the way up here, right where we believe that wave 5 is going to end. So this is really underlining the importance of this break right here, which I do not think is going to happen right now, right? According to my analysis, we don't break that monthly 21 exponential moving average until this is adequately retested. Okay, so that's Bitcoin. Now, I spoke in the beginning of the video of the live stream about how all of this is happening in a backdrop, against a backdrop of macroeconomic factors and big news happening in the world economy and in the national economy, the United States economy, which is very important because the United States dollar is the world reserve currency, all that stuff. Now, some people make their analysis based off of that and that alone. Okay, even people who call themselves technical analysts, they'll say, well, I'm going to put the charts aside for a minute and I'm just going to look at the fact that X bank went under or Y bank went under, or the Fed is raising rates, or the Fed is printing money, whatever. Here's why they're kind of correct. Because, as I always say on this channel, Bitcoin moves on the basis of the underlying asset. Bitcoin is a multi-billion-dollar asset class. Okay? Multi-billion dollars. In order to move it, I think it's about 500 billion at this point, right? Something thereabouts, right? In order to move it 1%, you're going to need $5 billion thereabouts. I understand there's open interests and all that stuff, but it's not moved that easily. So what is it? How is it that Bitcoin is so volatile, or Bitcoin can move so much in so little, or in so little time, right? How is it that it can go and reach these levels that people don't understand? It's because of the underlying asset. That's where the liquidity is. Okay? The liquidity is in the dollar, the underlying asset. Most people use the US dollar to buy Bitcoin, whether or not They're American because the US dollar is responsible for about 60% of world trade. It is the world reserve currency. So when you look at Bitcoin and you look at the US dollar and you understand that Bitcoin is purchased using the US dollar, and you track, right, as we have done on this channel, you track the movement of Bitcoin and the US dollar, right? And when I say the US dollar, I'm talking about the DXY, US dollar currency index. You can see that they're mirror images of one another, and you understand why that is. Because the DXY, the underlying asset, is what moves Bitcoin. So when people say, it's all about the macro, it's all about what the Fed's doing, it's all about this, they're not wrong. But my reservation in following the news is that you can't trade the news. It's very difficult to trade. It's hard to see coming, right? You don't need to do that. All you need to do is track the DXY, track the underlying asset. So this takes us to the DXY. This is doing exactly what we thought it would. Okay, let's go on the hourly time frame. So the DXY, we've been tracking it for quite a long time. We've been saying it's not bullish, right? It came up to these areas, and we said this was massive resistance. You're going to get a rejection. That's exactly what you got. Again, 3 waves. 1, 2, 3. That's a rejection. Now, here you are with this impulsive rejection. Then you come up in 1, 2, 3. Again, every single time you get a 3-wave move, understand that it's corrective. It's not lasting. You basically lost this level, right? And now you retest it as resistance. And here is your impulse. So basic support and resistance, we're doing exactly what we thought we would. Okay? And now when I say maybe they're correct, maybe the people who trade the news and think it's all about the macro are correct, it's because the DXY reflects all of that. The DXY reflects all these Fed rates. The DXY reflects all the interest rate the interest rate hikes and the money printing and the banks going bust, and all that stuff is reflected in the US dollar currency index. The US dollar currency index, for those of you who don't know, is a relative strength of the dollar's a relative measure of the dollar's strength, as opposed to a basket of world reserve currencies. You have the Japanese yen, the Swiss franc, the Swedish kroner, the Great British pound, the Canadian dollar, and something else. Something else. I don't even know. The French franc, I think. The French franc, yeah. So basically, you're going to understand all of macroeconomics, like international macroeconomics, geopolitics, through this one chart. And this chart can be traded because you can use it as an indicator for what your risk on assets are doing. This is why you don't have to watch the news, right? You can know that the dollar is losing relative strength, right? Let's take this off right here. You know that the dollar is losing relative strength, and you've known that for quite some time. You didn't need to wait until banks went under, or like inflation was down and looking at jobs reports. The dollar's been in a downtrend ever since September of 2022. We tracked it. And this is the beauty of technical analysis. I can't tell you why this works, though. People want to know why. I don't know. I just know that historically it works. I don't know why it works. I don't know if, and I don't think it's there's some really great technical analyst out there reading the charts and saying, oh, it's going down, let's do things to support that. No, I don't think that's what's happening. But all I know is that by and large, reading these moves in the charts typically is corroborated by news that sort of supports the movements in the charts. The dollar has been bearish for the longest time, and actually it started being bearish once we hit this ending diagonal, this extension right here, because it's like overheated. It was basically a blow off top, this is quite literally a blow off top, and we're waiting for it to reject, right? And I'm just going to zoom out for a second because I don't know who's watching, and if you're new, welcome, by the way. You can see that the dollar, ever since 2009, has put in this channel of price action, and this represents the top resistance of this channel. So when we were tracking the dollar last year on this channel, we said, once you get to these areas, you're going to reject. It's not a question of if, it's when. Because for 10 plus years, 15 years, right? Since 2008. For 15 years, this has represented major resistance for the dollar. So you're going to get a rejection here. You got a rejection here, 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 and here. That's a 15-year trend. And lo and behold, in September of last year, we got our rejection. And this should translate, because we know the relationships between the dollar and Bitcoin and risk-on assets, right? It's just a mathematical relationship. This should translate in a move up in risk-on assets and cryptos and Bitcoin, all that stuff, and that's exactly what we started getting. Now, the extent to which your risk-on assets are going to go up, that's another different set of analysis, right? You have to be a little more, you have to dive deeper into that risk-on asset specifically to see just how high it's going to go. For instance, an example is, I think the stock markets, the Dow, the NASDAQ, the S&P, they're in a bear market rally. So they're going to go up. They're going to make higher highs and higher lows. But they're capped. But I think Bitcoin is in a proper bull market. There's a difference. Both are going to go up, but one is going to go up significantly, and the others, the traditional markets, are not going to go up as much as people think, right? That is where I think people should be very careful if you're exposed to traditional stocks, right? And I don't really look at the S&P on this channel anymore because there's no point, right? Just look at the DXY because I'm only interested in Bitcoin and I'm only invested in Bitcoin and other cryptocurrencies. But if you're into stocks, be very careful. It's very likely a bear market rally. In any case, this was known to us. So now, when we zoom into present day, and we hear the news that, the Federal Reserve is pumping trillions of dollars into the banking system, it's news, but it's not news to us. It's basically another way for us to understand that the dollar is losing relative strength, right? It's being devalued, it's being debased, and it will continue to do so up until this trend bottoms out. And this trend is not even near bottoming out, okay? We can talk about beginning to look for bottoms in the dollar once we get into these zones right here. Right? And we put this in a long time ago, way before banks started collapsing, way before they started talking about quantitative easing, way before any of this stuff. This is why technical analysis is so powerful. And I know a lot of people don't believe it. They think it's bullshit, and that's fine. But if you practice this, and you know it, and you've made money off of it, and you look at it every day, day in and day out, and you understand how to do it, it's like a cheat code, okay? It's like a cheat code. And again, I can't explain why it works. I just know for with a high degree of probability, because we do this every day, and we trade it, and, we make a lot of money off of it, it works. Okay, so that's how the people saying, it's all about the macro, it's all about, figuring out who's pumping money into the economy and what the banks are doing, they're correct, but not in the way you would think. So Louis says Bitcoin will correct wave 2 of wave 3 on daily time frame. Hey Louis, wave 2 of wave 3. I don't know what your wave 2 of wave 3. Are you referring to my wave 2 of wave 3? I don't think so. I'm not exactly sure what you're talking about, the way. Obviously I'm on the 15-minute time frame. You said daily time frame, but oh, are you saying that this is wave 1? Okay, so you're saying, I think Louis is saying that this is wave 3. Okay, wave 1, wave 2, this is wave 3, and we're looking for a wave 2 like this? Is that what you're saying? If so, just to push back on that, if that were the case, Louis, there's no way you're spending as much time and holding this level. If that were the case, it's likely that you would have gotten something like you got in the past. Because this is a very important level. Understand this. This right here, this dotted line, is such an important level. If you're coming up to it, you're not going to hang out on it. You're going to do what you did before. If you wick above it, you promptly reject from it. So the idea that this is wave 1 of wave 3 and wave 2 of wave 3 is going to come is unlikely. And I talked about that yesterday, actually. If you saw yesterday's live stream, that this is likely wave 2 of wave 3. It seems like, and that's why I called it the most bullish retracement possible, because yes, it is relatively short. It's a minimal retracement to the 382, but look at the time. Again, this is advanced. When I started, I didn't look at time, but look at time. This is, you can't say that this is wave 1 and now this is wave 2 because the time is off. Wave 1 and wave 2 have a relationship where the time for wave 1 is approximately the same time as wave 2. Again, this is not, if I had to write a textbook on Elliott wave theory, this would be not in the advanced section at the end of the book. This would be towards the beginning. I would have saved so much money and so much time and so much headache understanding that. Because if you don't have, remember, look, all your charts, there's price and there's time. If you're only using price to figure out what waves are printing and how they're printing, you only have half of the story. Use the whole chart. Use both price and time. We have recorded, established, understood relationships between wave 1 and wave 2. If you're saying this is a wave 2, all this is a wave 2, then it doesn't work in terms of time. It just doesn't. It's unlikely. I'm not going to say it's impossible. It's improbable. Everything is probabilistic. So this is what I talked about yesterday. Okay. So we talked about the DXY. We talked about why the macro people are correct, but at the same time, they may be making it much harder for themselves, right? Because turning on MSNBC and C-SPAN is not the best way to trade. It's not really going to make you money because it's hard to not only predict what they're going to say, but interpret, right? If the Fed raises this by 50 basis points because everybody expected it to be raised by this many points, and then you have to use reverse psychology, all that stuff. You don't need to do all of that, right? Just learn technical analysis. Proper technical analysis. Okay, so we talked about Bitcoin, we talked about the DXY. Now, let's look at what this has, what this looks like in the rest of the market, right? Because again, if something so important and I'm looking for a good word here. It's right on the tip of my tongue. Pivotal, maybe. It's okay. Okay, we'll go with it. If something so pivotal is happening in the Bitcoin price, then we should see equally with the altcoins good things, really pivotal things. Okay, actually, before we move off of Bitcoin, let's turn on our indicators, all right? Indicators are our friends. We just have to use them correctly. We use them. They don't use us. So, on the hourly time frame, our stochastic RSI indicator has bottomed out. Very good sign, okay? Very good sign that you're your momentum is completely bottomed out. It's oversold while you're at the top of a move. And again, so Louis thinks that this is the top of a move and this is one contiguous wave 2. I believe that's your take. If that were the case, unlikely that your momentum indicator on the hourly time frame is bottomed out while you're here. That basically tells you that you are looking for another leg up, okay? On the hourly time frame, we're oversold. On the 15-minute time frame, we're oversold. On the 4-hourly time frame, we're starting to move down, okay? We're starting to move down, but we're still above our crucial resistance. Don't be surprised if what happens is that we move up, and in the process of moving up and down and putting in this Elliott wave correction, right? This basically, if you look at this as, let's just say this was primary, this would be the intermediate. Let's call it intermediate. I know I have it labeled as minute or minuet, but let's just call it intermediate, okay? So this intermediate wave 1, intermediate wave 2. Looking at this intermediate wave 2, you're probably going to see that your 4-hourly momentum indicator comes all the way down by the time you reset and retest this 55-day resistance as support, okay? So our indicators are basically confluent, corroborating our price action reads, okay? If Louis was, I can't say correct, but if it was more probable that something like what he's saying is true, then you would definitely see some exhaustion at these levels, right? If this were wave A, this were some wave B, consolidation, distribution, and then you put in your impulse down here to complete the 3-wave move, right? You would see an exhaustion on the smaller intraday time frames, on the hourly, the 15-minute, right? That would indicate the top of wave B, but that's not what we're seeing, okay? So our indicators are telling us that. Again, it's not about using the indicators at the expense of our reads. It's just corroborating. It's just another, like, what do you think? You know, the indicator is a trusted advisor, but the indicator is not the main decision maker. It shouldn't be. And if it is, your analysis is likely to be flawed at some point in time, because indicators have blind spots, massive blind spots. Doesn't matter how advanced the indicator you may how advanced you may think the indicator is. It is secondary. It is a derivative of price actions, derivative of some other thing that you can see, you can interpret it on your own. Okay. Louis says, to be specific, we still in wave 5 of wave 1 of wave 3. I mean, wave 1 of 3 not done yet, so we didn't even start correction. Wave 2 of 3, that's what I mean. I don't understand what you mean. Louis says, I'm a big fan of you anyway, Dean, because you're one of the realest people out here. Appreciate what you're doing, man. Much love to you, Louis. I appreciate the appreciation. I'm just going to try to understand what you're saying. Wave 5 of wave 1. One of 3 not done yet. Okay, I understand what you're saying. Wave 5 of wave 1, I mean wave 3. Wave 1 of 3 not done yet. Wave 1 of 3 not done yet. Okay. I think I understand what you're saying. Okay, so and this is good. This is good. So, you know, this is our issue in using Elliott wave. And a lot of critics of Elliott wave will say, you know, everybody has an idea as to what the wave count is, and there's so many different options, so many different possibilities. You know, it's a useless form of analysis because everybody can have an opinion. And at the end of the day, what are you trading? You know, his opinion is just as good as yours, right? Or something like that, right? So I would say, in response to Louis' comment, it can get confusing. And you yourself may have a lot of different options for what is the viable wave count. When in doubt, zoom out. Go back to basics. Forget the Elliott wave counts. Because understand, the Elliott wave counts give you a level of precision in your analysis that is unmatched. So much so that you can give price projections, you can give retracement projections, you can give time projections. But when you're doing your analysis, sometimes you get lost in it, and it's a low probability analysis when you have 50 different options on the table, right? If, for instance, Loai is saying that this is still not finished, this is like the end wave of this entire wave, maybe, or something like that, it actually doesn't matter. And this is something I learned later on in my career. Forget it. When it's that complicated and you're confused, and there's a lot of options and you're unsure, are you going to put your money on that? Like, I make 5-figure trades. Am I going to put $10,000 on that? Fuck no. If I'm not sure, I'm not sure. What I'm going to do is I'm going to go back to basics. And what are basics? Support and resistance. This is major support now, but it was major resistance before. Boom. That's why I started the analysis like that. Don't get lost in the minutia. The Elliott wave, I think of it as, sometimes if I'm zoomed out like on the weekly or monthly and I'm counting waves and, just looking at an asset, this is different. But generally speaking, the Elliott wave can serve as the fine-tooth comb if you're an archaeologist and you're excavating a site, right? You know that brush that archaeologists use? Are you going to use that when you first get to the site? No, you're going to use a pickaxe and a shovel and maybe an excavator, right? You're going to start moving dirt. You're not going to sit there with a fine brush and just start going. Like, no. They're different tools are used at different periods of time. Once you establish the basic high probability analysis, the support and resistance analysis, meaning 55-day support, you can't disagree with that, or you can disagree with that, but it's hard to deny. It's clear as day, right? It's as clear as day. If you look at the charts, that is 55-day resistance. It's a significant resistance. You don't need any moving averages. You don't need any VRVP, VPVR. This is resistance. This is resistance. Price is telling you every single time I get to this area, I have an issue because there's something there. That's all you need to know. So, in the past, rejection. In the past, rejection. In the past, rejection. Finally, a break. Now that is significant. Doesn't matter what your Elliott wave count is. There's something that you need to pay attention to there. That's my point. That's why I want to do that first before I even dive into the Elliott wave analysis, because at the end of the day, if I'm putting money on this, which I am, I'm not going to put money on it just based off a spurious Elliott wave count that, is not as technically solid as the support and resistance analysis, right? So given that, I'm seeing, okay, there's a break of this resistance. Now, it's not just it's a break, but price is being comfortable above this resistance. That's the main story, Loai. That is the issue, or that's the main, oh shit, something actually is happening here that is significant. This is what you should take away from this. Forget your wave count. Your wave count should actually be informed by this. Okay? And at the end of the day, once you look at that, you can then look at viable wave counts around those facts. But there is no okay, this is wave 3 of 5, or this is a minute or a minuet wave. Do you understand what I'm saying? You want to do triage. You want to do the most high probable analysis on a high time frame, and then go progressively on a smaller time frame with more spurious, more fine-tooth analysis, with more precise analysis. I think that's the smartest way to do it. That's the most effective way to do it. This is how I've gotten the best results. I've done it how I'm saying I wouldn't do it. And, it's not, you don't have a high level of, you're not as accurate as often doing that. Just only looking tunnel vision. I have a count and I'm going to only look at that count. Do you understand what I'm saying? Anyway, let's move on. So that was Bitcoin. We used our indicators to corroborate all of this, and our indicators, at least our momentum indicator, is telling us that indeed this is likely going to take place, something like this. As I said, what I'm going to do is I'm going to leave this on, but as things progress, I'm going to track this, what I think is a complex flat correction, okay? And then the final wave 5 of this impulse right here. I'm going to track it, okay? And then I'm going to track the response at this level. I'm going to track all of this, and I'm going to really I'm going to modulate, or I'm going to improve like my predictions in terms of time, right? Once this is finished, I'll have a time for these 5 waves. Then I could put a time for these 3 waves, and so on and so forth. Okay, that's what I'm going to do until this is finished. Okay, so that's my idea, and that's why it's my idea. All right. Moving on. Let's look and see what other assets in the market are doing. If this is indeed a huge area for Bitcoin, then it should be an important area for other assets, okay? You can't just have Bitcoin having all the fun, yeah? And by that, in saying so, let's have a quick look at our Bitcoin dominance. Why? Because we want to know how Bitcoin is reacting, or how Bitcoin is responding to altcoins and how altcoins are responding to Bitcoin. So Bitcoin dominance gives us a little bit of insight there. And so when we last left off, we were saying that Bitcoin dominance was in this corrective pattern. And it still seems like 1, 2, 3 waves, that's corrective, so we know it's coming down, okay? And if you want to zoom out even more, we are in what likely is some sort of complex flat correction that we've been in for quite some time. Let me get rid of that. So the top of this range is resistance, and the bottom of this range is support. But it's a range. We've been in this range ever since 2021. So for a long time, Bitcoin dominance has been going up and down. For those of you who don't know what Bitcoin dominance is, it's a measure of Bitcoin's market dominance vis-a-vis the rest of the cryptocurrency market. So I said earlier, Bitcoin was about $500 billion market, right? If you look at the entire cryptocurrency market capitalization, how much of that is Bitcoin? So right now it's around 40 some odd %, right? So Bitcoin's about half of all of the value of cryptocurrency. That makes sense, right? So when Bitcoin dominance goes up, that basically means that Bitcoin is gaining market capitalization against other assets, and that usually happens in a bear market where everything's going down. Bitcoin's just going down a little less because it's less volatile, okay? But in a bull market, the exact opposite is true. Those more volatile assets gain market cap over Bitcoin, and so Bitcoin dominance decreases. This is why we look for decreasing Bitcoin dominance in a bull market, okay? And we allege, or I guess my case on this channel is that we're entering a bull market. We're in a bull market, and so we should see Bitcoin dominance come down. And so on a high time frame, we've seen that Bitcoin dominance obviously is in a downtrend. There's a massive downtrend here. And it's been consolidating, like I said, since May of 2021. That's about two straight years of consolidations. And more specifically, I believe that this consolidation looks something like this, right? Like some sort of complex correction. And right now, you're basically butting your head against this top resistance, okay? So it's very likely, given where Bitcoin dominance is, that our next big move is a move to the downside, right? Again, this is basic support and resistance. I love it. It's simple. It's straightforward. You don't need... It doesn't matter if this read of a 333 WXYXZ is incorrect or if it's a 33 WXY. It doesn't matter. At the end of the day, it's basic support and resistance. You can draw a very nice channel here, and we're going to do that if I can find the tool. Guys, if you're getting value, please like, share, and subscribe. Here we go. Draw a nice channel here. Okay. And this encompasses all of this price action. Right? You don't need any spreadsheets. You don't need, any of these things you see on crypto Twitter. The alpha, just read the charts. And the beauty about chart analysis is we can read Bitcoin market dominance. That's not an asset, but you can read chart patterns. You can read the DXY. The DXY isn't an asset. It's a relative index, but we can read chart patterns in it, right? You can read these things and see them coming before they happen. So here, you're going up and down and up and down and up and down. This is resistance. This is support. What happens at resistance, especially in a trend, you complete the trend. Okay, so whatever this is, right here, it should resume once this is finished. That's it. That's the simple, straightforward, high probability analysis. Okay, and so again, if you're coming down for Bitcoin dominance, what's that mean? That means the altcoins that you know and love are going to gain against Bitcoin. So if Bitcoin gaining market cap, your favorite altcoins are going to outperform Bitcoin. This is what the Bitcoin dominance says. Okay, now let's go to our altcoins and see if this is indeed the case. Okay, we're going to start with Cardano, our first. Let's jump into the hourly time frame. Okay, so again, if Bitcoin's at a pivotal stage and Bitcoin's finished with, it's pretty much about to break, this massive resistance. It's not just 55 days of resistance, but I didn't actually show you this, but I think a lot of you already know this. I didn't want to rehash the same analysis over and over again, but please understand what this all means. Yes, it's 55 days of resistance locally, right, that you're breaking, but understand that this represents a break of a 300-day resistance right here. Okay, maybe 275 days, okay? The move up here, anything above this represents a high time frame break of resistance, okay? Retested as support right here. That's why that was so important. We talked about that already, okay? So that's what... but locally, it's 55 days. In any case, Cardano, on the small time frames, is showing you that you have... let's go on the 4-hourly time frame. Okay, Cardano has a similar high time frame resistance about there, okay? And what's interesting is that you tested it, you got rejected from it in 3 waves, and now you're going to test it again. More likely than not, you're finally going to break above, retest it, and then continue, okay? So this is what we're seeing. Not only is Bitcoin putting in a pivotal move to break high time frame resistance and go into really bullish territory, but you can see altcoins starting to do that as well. G Tekken says, let's go. Indeed, let's fucking go. So that's Cardano. All right, Algorand. So here you put in this massive move up and down, right? 5 waves up, 3 waves down, very likely. And then you put another move, 5 waves up, 3 waves down. But I think this move, let's see. Yeah, just eyeballing it. Let me just see. Let me see. Hard to eyeball. Okay, 2 days, 4 hours up. And a day down. Okay, yeah. So what it's showing us here is that Algorand is more likely than not in some zigzag, okay? Maybe you do something like this, okay? Wouldn't be surprised if that happened. But you put in 5 waves up, 3 waves down correctively. Do you continue from here? Perhaps, right? Does this go correction, correction, impulse? Maybe. Or maybe this is A, B, C, you know? Let's look at our indicators. Let's get a little bit of help from our indicators. Okay, our 4-hourly time frame still has move to run. Hourly time frame completely bottomed out. 15-minute time frame a little topped out. Okay, a little topped out. So it's likely that this, given the 15-minute time frame, the small time frame indicator, do something like this. Okay, would not be surprised if that happened for Algorand. Let me check something. I'm gonna check. I'm just checking my stops for this. So I would say protecting against that potential move, that downside move, I would say, yeah, I would say this would happen something like this. B, so this is a B wave, distribute here, then you come down. That not only would retest that 0618, but also this midline, which we know is important in any channel. It's support when you're above it, resistance when you're below it. And you're basically retesting the neckline of this inverse head and shoulders. So I actually think that's a high probability move. I think you get something like that in the next coming hours. And then after that, you do get a move up. So yeah, again, hiding any downside below, well below the 618, I think is safe. Okay, so that's Algorand. All right, let's see. Actually, let me remove this. Okay, Arweave. Okay, I think this is... I want to say this is also a corrective move up. You're making higher highs and higher lows, but it doesn't look very impulsive. It looks stilted, okay? Our 15-minute time frame kind of says the same thing. Do you see how the 15-minute time frame here is a bit overheated? It's overbought. It's possible, but I think it's unlikely that this continues up, right? I think that you basically put in some distribution and then you come back down. This 15-minute momentum indicator resets there. And yeah. Okay, let's look at this. If that were the case, what's the context of that? Okay, right here you put in... I want to say you put this in right here. Yeah, I think here you put in... I would say from here. You put in an A wave. This is an A wave. This is a flat correction. This has to be a flat correction, okay? So the idea is this. And again, here we're going to leverage our understanding of Fibonacci retracement levels, and Elliott wave. So in Elliott wave, there are flat corrections, there are triangles, there are zigzags. 3 types of corrections, right? A flat correction is one where you retrace to a minimum of the 786 Fibonacci retracement level, a maximum of the 1618 Fibonacci retracement level, okay? It can't be a zigzag because a zigzag respects the 0618, okay? This came up. This retracement has to be flat because you've completely come beyond the 0618. So, because you've come beyond the 618 and you still have yet to hit the 786, what I think is highly likely with this R weave is that you put in 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. Okay, I'm counting obviously the impulse here, 1, 2, 3, 4, 5, something like that, and that hit your 786 because you still have yet to hit that 786. So if I'm in R weave, I'm looking out for that move down. I think it's highly likely. So let's let me look at my own position. You know, none of this stuff I'm saying is like I'm just gonna talk about random shit. Remember, everything on this watch list is something that I'm actively trading. I have 25. You can see my watch list right here. I have 25 active positions. I'm not sharing how much money I have on here or like whatever. Like that's kind of tacky. I don't care. Like I'm not trying to get the IRS to watch my streams and then, you know, I'm paying my taxes, by the way, IRS, if you're listening. But I'm not trying to be all hot about, you know, my earnings and stuff like that. What's important about what I'm talking about is the analysis. Okay, not how much money I'm trading or, you know, all that stuff. But anyway, if I'm looking at stuff, it's because I'm actively trading it. And if I'm saying I'm protecting against downside, I'm literally protecting against downside because I'm trying to stay alive in a position. This is how I'm managing positions. So I'm speaking from experience and I'm actually doing this stuff. Sometimes people jump on the stream and say, hey, let me see your positions. It's like if you watch the streams, you know I'm trading all this stuff. In any case, I think what's likely happening is that you're going to get some sort of move like this, okay? Where this entire thing will be a correction and a counter correction. This is your correction, this is your counter correction, okay? Remember, corrections always come in 3 or flavors of 3. Even here, you see it looks like, what's the flavor of 3? The flavor of 3 would be A, B, C, and C would be the impulse, okay? But I think you start getting that correction. This is your first degree of AB basing. This probably your this would be your second degree of AB basing, and then you would have a third degree right here, something like that. I don't know. I'm not exactly sure. But all I know is that just isolating my analysis on this looks very likely, okay? So if I'm in R-Weave, which I am, I'm protecting against downside risk, and I would not be surprised if we come anywhere between 786 and a 914. It's just very likely. And again, if I turn on the momentum indicator, I could see the 15-minute intraday is completely overbought. Okay, and my hourly time frame is moving in that direction. Let's see, it's about to move up even more, you know. So let's wait the 2 minutes to see what this hourly momentum indicator prints. But I wouldn't be surprised if your hourly momentum indicator got all the way up here, really showing exhaustion intraday. You know, but I would be very mindful of this being a mini distribution right here for, you know, this, something like this. Boom. Okay, obviously I don't think you're coming down this low. I think you're gonna stop in this zone of flat retracement between 786 and 914, which I typically see as the target for these flat retracements. So here we're just going to wait the 2 minutes for the candle to close and to see what this momentum indicator says, if it does take our momentum for the hourly time frame all the way up here. Let's see. So there's less than 1 minute left. Guys, if you're getting value, please like, share, and subscribe. Okay, 3 minutes. Okay, it's 3 o'clock. New candle. Yeah, you're all the way up here, and it doesn't look like you've got much strength. So, you know, I think this is coming down. So yeah, I would watch for that. And so what I'm going to do personally is I'm going to set an alarm here at the 786, because I understand that this is a minimum retracement for these flat corrections, and this has to be a flat correction because it's not a triangle, but it's already kind of broken the 618. Okay, so this is very likely right here. Okay, so that's our weave. All right, moving on. Okay, Audius. I think you're putting in something a little different here. Okay. I want to say that your impulse, or whatever, corrective impulse or your pure impulse starts here. And here you can see, unlike Audius, a very, very nice respect of that 618. Okay, so you went up in 5 and you came down in 3. Okay, but you can tell by the time it took that there's very little relationship between the move up and the move down, which tells you that this is likely corrective. It's a zigzag, 5 waves up, 3 waves down correctively. So what you're looking for is a continuation of a corrective sequence or pure impulse. Okay, why would you look for a continuation of a correction if you're putting in a consolidation reversal, 2 degrees of AB basing in a pivot? So I'm looking at this now, understanding that we may very well be putting in 5 waves up, 3 waves down of pure impulse. Let's look at our indicator, 15-minute time frame. We're completely overbought. So let's now focus on this right here. The time. Okay, it's about 9 hours up and about 4.5 hours down. If you add all this consolidation, it gives you 9 hours. Let me use the Fibonacci retracement tool. I would say here. See, here you're still respecting. Okay, here's what I think about this. Okay, audio. I think that whatever's going on here, you're likely going to respect these levels right here. Because just basic support and resistance, you spent a decent amount of time with this base, okay? And you broke this level, okay, which was for, at least on the small time frames, a day and 7 hours. That's significant, okay? So what happened, again, if you're confused, just go back to basic support and resistance for high probability reads of the market. A day and 7 hours, okay? You finally break. What do we know about breaking support and resistances? If you break significant support and resistance, and on the intraday time frame, yes, this is significant, you're going to have to retest it. So I am expecting a retest of this level, which would make this some sort of flat correction. 1, 2, 3, and then this would be probably something like this. So I think you're coming to at least a 786 of this, which would be a sufficient, or sorry, the minimal retracement for a flat correction. But I think that's exactly where you land. I think this is what you get eventually. A tag of this, and this would be the breakout, retest, and then finally a move up. So that's what I'm expecting for audio. So if I'm protecting against downside for this position, I'm going to set my stops and liquidations beyond this level right here of this price action. So I'm just going to check what I have. And yeah, I've done that. Okay. So I hope that makes sense. Like, whenever you're in doubt, just use support and resistance, because, you know, it's the highest probability way to read the market. Basic support and resistance, it's undefeated. Okay, let's go back to... Oh, you know what? We talked about the DXY, but we didn't talk about why it was likely to go down further, right? Let's just go on the hourly time frame. I didn't mention this, but you saw that we rejected, and we put in this 3-wave move. Now we're in impulse. So just let's look at this impulse real quick. And I just wanted to show you the fact that this was likely a wave 1, wave 2 this was likely a zigzag. So a ABC or WXY, whatever you want to call it, right? Where you put in a move, right? An impulse, corrective impulse, and then a retracement that retraces between the 0.5 and the 618 of that initial impulse. So this is your initial impulse. All of this is your correction between the 0.5 and the 618. You see that? That wick takes you right there. And then you continue the impulse. So boom, boom, boom. That's your ABC or WXY zigzag. And so essentially what you can do is you can start counting this as an impulse on the way down. So this, if this is wave 1, that would be wave 2. Okay, again, look at the time it's taken to go down in impulsively there and to go up impulsively there. They're about the same. And then this is a continuation. Wave 1, wave 2, wave 1, wave 2. You can continue to do that. If you're building impulse on a higher time frame, you're going to see iterations of wave 1 and 2. So this is what I wanted to say really quickly on the DXY that I didn't mention earlier. Okay, audio we saw. But yeah, don't be surprised if some of these altcoins start to move before Bitcoin does. Don't be surprised. You know, even the ones that seem like they may not, don't be surprised. Don't be surprised. I still think this one's coming down. But in any case. All right, Blur. Let's go on the hourly. Okay, so this we saw yesterday was likely some sort of... How did I read this? Doesn't matter. How do I want to read it? Maybe something like this. Some sort of 5 waves up, 3 waves down zigzag. Okay, this is how I think it's likely happening. Okay, I'm taking this as a corrective impulse. I'm taking this as a counter correction of that impulse, not a pure, impulse, right? And then this, I would say, this is quite bullish because right after that you have some so basically everything here is a consolidation reversal. I think a consolidation reversal basically absorbing this supply dumped on the market. So I'm essentially going to focus on this period or this region of the chart, and I'm going to look for 2 degrees of AB basing and a pivot for a breakout. Okay, so that's how I'm thinking of what Blur's doing right now. So I'm going to zoom into the 15-minute time frame. Okay, and I'm looking at this as big A, maybe down. How do I want to see this? Okay, I want to say A, B, so that's first degree. I would say A, B, second degree. I think this is a second degree zigzag right here. I think you're basically A-B basing. This is how I'm seeing it. Does that work? That doesn't really work, right? Because we know that these A-B bases have to come to a minimum of 0.5 or 618. So, okay, that may still be in play, because if this is your A wave, and I don't like that. I don't like that. I don't like that. I don't like that. I would say this is my second degree right there. It's a little smaller. Let's measure it really quickly. Okay, that works. That works. That just about works. Yeah, I don't know. This is tough to read. I'm not gonna lie. This is tough to read. I'm gonna pull out some indicators to help. Okay. Okay, I think that I want to do this. I want to just channel this. If this is indeed a series of AB bases, that's fine. But I think the integrity of this channel has held thus far, and we're likely to continue to hold it. So, whatever this is, a series of consolidation reversals, I think you're coming down to the bottom of this channel before resuming. Okay? The hourly time frame, okay, that is likely, right? Because the hourly momentum indicator is bottomed out, and the 15-minute time frame, 15-minute momentum indicator is basically at resistance, which is the midline of this channel. So all it has to do is come down to here before resuming. And so if I am trading this, which I am, I'm basically going to hide my stops under this channel right here, right? Assuming this channel holds, I'm going to hide my stops under this channel, which I did. Okay, I don't know, because I didn't come up with that idea before, but my stops are actually there, right here, for this asset. So I'm not exactly sure how I came up with that. Perhaps I took all of this right here. Yeah, maybe I did that, something like this. But actually, I would actually do this. I would move it a little lower. I'm gonna move it a little lower. Okay. If you're to use the Fibonacci levels, I'm basically taking all of this and this retracement. I'm going to use the phi ratio as my support, and so I'm going to hide it right below this phi ratio. That's what I'm doing. In any case, I am seeing a move down here, and you can see that this 15-minute momentum indicator is kind of overbought, and so won't be surprised if you get a rejection at this midline and then you come right back down, retest this 1, 2, 3 times, consolidate, and then you move up and out. Okay, so that is Blur. Okay, Bonk. This is one I've got on spot, and I think what you're getting here is some sort of zigzag. Okay, it could be pure impulse as well, because I think I measured this morning. The time it took to go up impulsively here was about 13 hours. The time it took to come down correctively was about 14 hours. Okay, so there is some sort of relationship there. I think this may be pure impulse, but what you're going to see, at least on the small time frame, is a little more consolidation at these levels, and this momentum indicator is going to reset a bit, right? And then you're going to have some runway to go up. On the hourly time frame, you can see that you're already bottomed out, so this move to the upside is coming. Okay, and all of this coincides or is kind of contemporaneous, or what's the word I'm looking for? All of this makes sense given our Bitcoin analysis, which is also getting ready to go on the hourly time frame, but on the small time frame seems like, the 15-minute time frame seems like you're going to experience at least a little more downside. Okay, here we can see that you have, if this is a I'm trying to find the words, give me 1 second. If this is a flat correction, a complex flat correction, you're looking at one wave, okay, W wave. This is the second wave. X wave, you're looking at a pivot. Y wave, okay, that would be a WXY. So just like Bitcoin is likely to come back down, this 15-minute momentum indicator is likely to come back down to finish this complex flat correction, do expect a lot of these other assets to do the same. It's not a big dump, because you can see on the hourly time frame we're already ready to go. Okay, so that's Bitcoin again. So moving forward, Dent. So again, I do think that what you're seeing here, I think this is really nice because it's quite straightforward. Again, support and resistance is everything. Resistance, break. Okay, you broke out of this level. Now, what do? You retest. Break, retest, consolidate. You finish this consolidation, you're done. That's it. Nothing more, nothing less. Okay? I would not expect a move much lower than where we are now, not only because this is support as indicated by this price action here, but also this represents the 0618. So we have some confluence here. So this, if I'm protecting against downside, I'm going to set my stops and liquidations at that level, right, for Dent. That's exactly where I did. Yeah, that's exactly what I did. Something like this. I'm just checking my stops. Yeah, So that's what I'm looking at for dent, and that's why I would trade it as such. Okay, it's still the same trade. I've been in the same trades for weeks, but this is called managing the positions. And to manage positions, you don't just set it and forget it. Sometimes you got to move stuff around. You got to change your margins, or you add to your margins, reduce your margins, move your stops here and there. So that's all I'm doing here. It's work. It's a lot of work. You know, people say you don't have a job. I do have a job. This is what I do. It's not YouTube paying me. It's not, you know, some revenue from referrals. It's just my trading, and that's my trading. I don't take trades every day, but I do manage positions pretty much every day. You know, checking on them, making sure they're healthy, all that stuff. Okay, this is Dodo. For Dodo, what am I seeing? I'm seeing a series of consolidation reversal patterns. Okay, not surprising. This is messy. A lot of people don't read this. It's a little more challenging to read. But what I'm seeing here is the following. Kind of like what we saw in Blur. I'm seeing a channel of consolidation reversal patterns. Okay, like we can kind of go into detail as to what exactly, you know, the AB bases are, but at the end of the day, I think you're putting in a series of AB bases. Okay, so I would set this as the support level and this as the resistance level. And so right now, you're at the bottom of this channel. Now, if that is what is true, then you hold this channel. You don't just all of a sudden break down from it, okay? Because this, for instance, can be 5 waves up. This could be 3 waves down. That's a zigzag. And then you could be putting in a flat correction, right? This is 3 waves up, 3 waves down, okay? And then this could be an A wave, 3 waves up. This could be 3 waves down, okay? So that's 2 degrees of AB basing and a pivot. And then this could be some small consolidation. Would not be surprised if that were the case. On the hourly time frame, you're ready to move, as most of our assets are completely oversold on the hourly time frame. So this is a likely scenario. Okay, unlikely that you come down, break this, retest it as resistance, and then create a massive break of this ascending channel. Okay, so for me, I'm also trading this like I traded Blur, except if I want to set a technical, let's see, if I want to set a technical stop, because this is a flat correction, right? 3 waves. Technically, I have to hide behind the phi ratio. That's why it sucks to trade flat corrections. But the phi ratio is all the way down to 1625. So this means that we could do something like this and still be okay, right? As far as this whole price action is concerned, you can do something like this, because flat corrections, right? Remember, this is the initial break, this is the initial break, and this is the counter. So this can retrace all the way down here and still be a contiguous counter for this initial break. That's why flat corrections are not the best to trade. But yeah, I'm hanging out way below there. So they're hard to trade, but if you know, they're not like zigzags. Zigzags, it's a little easier because you could just play with the phi ratio, the 618. Okay, so let's keep going. So that's Dodo. Okay, Dogecoin, you're seeing a similar kind of scenario where you've put in this retracement here. Ever since this level right here, you've kind of been going up correctively, but it's not the kind of corrective retracement that you can expect to lose anytime soon. Okay, let's look at this in simple support and resistance terms. Okay, you did a lot of stuff right here, and this was clearly resistance. Now you clearly broke and then retested. Okay, right here. Let's be more clear. Right here. Break, retest. Continuation. What I see here is a continuation in 3 waves. Okay, 1, 2, 3. So I'm expecting a 1, 2, 3. So again, I'm expecting a flat correction here for Dogecoin. And I think that this is my initial break of... I'm thinking. Sorry, 1 second. Yeah, I like that. Okay. This is what I think is likely. I think all of this is an A wave. I think all of this is going to be a B wave. This is probably the 786 of this. Let's pull out our Fibonacci retracement levels and see. If it is, then it's very likely what to expect. Okay, look at that. Look at that. Okay, you see how that works, guys? This, basically, you broke this level. And again, this goes back. This is not like some spurious Elliott wave count. The beauty about this is that it's based off of high probability support and resistance analysis. This is an A wave, a corrective wave in 3. Okay, it's a flat correction. Okay. Now, the important part of this, and the thing that is most high probability about this analysis, is that you broke this resistance right here, and you never retested it really. Okay, you spent about a day plus under this level. You broke it, and this is not an adequate retest of this level. You're going to have to retest it in good measure. So what I'm expecting is for the price to come up and to come all the way back down to here before resuming. Okay, highly probable. Now we're going to turn on our indicators and see if there's not something to that. So let's go and leave that on here. Okay, and I do expect for it to stop here. Why? Because we spent a lot of time creating this level, right? Making this resistance, breaking this resistance. We're not going to lose it all of a sudden. If we lose it, it's going to take some time to lose it, right? So we're likely going to come back and price is going to stop right here, and that coincides with the 786, which we know is the minimum retracement for a flat correction. See, this is how you make high probability reads, and you integrate it with Elliott wave analysis. It's not just willy-nilly, let's draw some random lines on a chart. You just basically look at support and resistance, and it helps a great deal. Okay, so I think Dogecoin is coming back down to 7.08 cents, 7.09 cents. Now let's turn on our indicators, and our 15-minute time frame is completely oversold. The hourly time frame looks like it can come back down a bit. Okay, it looks like it's going up, but it doesn't look like it's going up to do much. So I think that this double top right here, and you're about to create some bearish divergence on the 15-minute time frame with these two tops, as you can see here. You have a higher high, and here you have an even high or even a lower high. This is going to take you back here. So what I'm going to do is, if I'm trading this, which I am, I'm going to check that my stops are in below this level, because this is the scene of the crime right here. I think this is going to be the scene of the crime right here. So we're going to go into Dogecoin. And yeah, I'm going to take some profit here so that when we come back, I can make a better entry. Okay, so I'm gonna put an alarm here right before the 786. So I know when to make my next entry into this asset. Does that make sense? Right on the neckline, right where, we left that breakout, retest. That's all this is. It's basic support and resistance analysis. Very, very powerful. Okay, Polkadot. What do we have here? 1 second, let me write something down. One second. Okay. Polkadot. Okay, here, looking at this looks, smells, and walks and talks like a B wave. Okay, but now let's get a little more specific. Again, this is a level right here. You broke this level, very, very likely to come back down here. Okay, looking at this more holistically, it looks as if you put in some sort of impulse that started here and there you go. You'd be coming back down here. Okay, very likely, very likely. You see how that works? Because you broke this resistance. Okay, look, this was support. This was support right here. And now you drop below it. It's resistance. Oh, you broke down below it. Or broke down below it and you broke above it, rather. Now you have to retest it. You never retested it. Okay? Basic support and resistance goes and beats everything. I'm an Elliotician. I love Elliott wave theory. It allows me to be really precise and take high leverage and make really pinpoint accurate entries on high leverage with a high degree of probability, high degree of confidence. Many trades won because of, what the information afforded by Elliott wave analysis. But at the end of the day, the support and resistance rules the day because it gives the level of probability and simplicity and dispelling of confusion that support and resistance analysis gives is unmatched. So for Polkadot, you're very much likely to come back down to this 609 level, okay, which would be a 618 retrace, right? 1, 2, 3, right? Very likely to do something like that. And that is, let's see if I am well positioned. Yeah, that's almost exactly where I'm positioned. Okay. So I am, once again, going to do what I did. I'm going to set an alarm at this level. And actually I'm going to label it. Call it by dot. You should label your alarms because they're going to pop up and you should know what it's for. So I'm going to label this one as well. And you can, if you guys don't know, you can set your alarms with different sounds and all that stuff, and to ring indefinitely or whatever. By Doge. So, you can put a message to yourself. Here, I have it set as an open-ended alert. But, I don't need it to ring all the time. Once is enough. I'm always looking at my phone anyway. And I can I can see even if my phone's on mute, I can see the TradingView alert. And it sends me an email, all that stuff. See, look. You can make it send you an email. where is that? Notifications right here. Send email. Do you see what I mean? Send email to SMS, all that stuff. So just a word to the wise, like you don't have to be stuck on your desk to really, get into all of these entries or, set these alerts properly. No. Anyway, I'll do that later. Okay, so let's move on. Dot, we already did by dot, by Doge, right? Did I do that right? Yes, okay. Dot Doge. Oh, Arweave, I have to set, right? Okay. There we go. Okay. So it looks like Bitcoin's putting in the, we're still in, I believe, this mid move, this X wave, right? If this is W, this is X, I think we pivot into Y, okay? I think that is what we get next on the smaller time frames, right? We're still working in what we believe is that complex flat correction. So it's not, don't expect a big move yet for wave 5. At least I don't believe so. I don't believe so. And I think our indicators are telling us as much. At least on the 15-minute, yeah, you see you're completely oversold. Completely overbought, rather. Overbought. Okay, so back to our altcoins. Let's go on the hourly time frame. Okay, so we see DYDX. I'm seeing this as a simple zigzag. I'm seeing this as a simple zigzag where I would pull my Fibonacci retracement level from the bottom all the way here to the top, and this I'm expecting to look something like this. 3 3 1 2 3 4 5. Okay, because you've already satisfied that 0.5 Fibonacci retracement level, we know the zigzag has to hit the minimum of 0.5 Fibonacci retracement. It goes between 0.5 and 618, and there is no big resistance that was broken, that was never retested. I don't see any reason for this to come all the way down here. It can actually do something like this. Doesn't matter. This was already put in. So there's no reason I see for DYDX to come down much further than that. So if I'm trading this, I'm quite comfortable setting my stops around $2 right below the phi ratio. That doesn't bother me at all. And yes, this is what I've done. Yeah, so there's nothing, I don't expect a big move down in DYDX before continuation to the upside. And again, your indicators are telling you as much. Your hourly indicator, momentum indicator is down. It's close to starting to go up again. And then your 15-minute indicator is all the way up. So you can see there's going to be some downwards price action, right? It's overheated on the 15-minute, okay? So that's DYDX. Moving on, Ethereum. Okay, I see this quite clearly as a type of wave, 5 waves up, 3 waves down situation. I'm thinking. Okay, for this I'm going to do something similar to Bitcoin. Okay, I'm going to do something similar to Bitcoin. I'm going to look and see what's happened in terms of support and resistance, and I think you're seeing something similar, right? You're seeing that megaphone pattern right here. You're seeing big wave 1, big wave 2, okay? And so you want to focus in on this as being, you know, a new wave. Okay, so let's just do that. Okay, do we have a trend? Yes, we do. Let's delineate that right here. This is our trend. Okay, so unlike Bitcoin, we have this trend, and it has lasted, like Bitcoin, it has lasted about 55 days, yeah? Okay, but unlike Bitcoin, we have yet to break it. Okay, Bitcoin's a bit ahead. Bitcoin's a bit ahead, as we've seen with the Bitcoin dominance, you know, shooting up, but reaching resistance. It's shooting up, okay, and this is kind of evident in our altcoin analysis. Altcoins are a step behind, okay? So this 55-day trend, resistance, 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 resistance. So what I believe you get here, that's going to be a little different than Bitcoin, is some sort of retracement like this. Would not surprise me. Let's look at that. Let's look at that before we conclude that. Okay, what I'm gonna do here is I'm going to go on the hourly time frame. I'm going to assume that this is a wave 1, wave 2 situation starting here. I'm going to pull this Fibonacci retracement level from the bottom to the top. Okay, I observe that the 382 Fibonacci retracement level, which is the minimum retracement for any wave 2, has been hit. Okay, I'm going to measure the time it took to go up in 5. It's about 3 days, 6 hours. I'm going to measure the time it took to come down in 3. Okay, so this is it. This is it. You should expect this. Do you see how that works? So if this took 3 days, 6 hours, 3 days, 7 hours, then that should take the same amount of time. And guys, can't make this stuff up. Do you see that? Look, you're basically, I don't know, maybe it's something like this. 3 waves, 3 waves. You're basically expecting something like this, okay, for Ethereum. And that's what the charts are showing you. That's what the analysis shows you. So if I wanted to protect my Ethereum position against any downside risk, I would protect against, and here you can see, I'm going to show it to you what I'm looking at here. Where is the... Here it is. Okay, all of this was resistance that has to be retested. Right here. Quite clearly. You see that? It's basic support resistance flip. So while you were going up, you broke this channel to the upside. But this channel represents resistance to the price, right? You broke it. Now you're going to retest it. I would expect the price of Ethereum to come back to around 1590. Okay? So if I was in Ethereum, which I am, I'm expecting a pullback to around that area. Okay? around 1590. Okay, it can come back all the way to the 618 because we know the 618 Fibonacci retracement is where the maximum retracement for a wave 2, and that is confluent with the midline of this channel. But I think that this channel, given that it's been established, this is going to present or this is going to serve as some support right here. So I think this is the move right here, right there, about 1590. Okay, which would be about, let's see, I'm gonna check. Okay, so if I'm okay, the smart trade would be for me to take profit and set an alarm here at the 382, because we know the 382 is very much likely to serve as a minimum retracement of some sort, right? It was already hit, but if it comes back, we're at least going to come down here, but I think we come down all the way here on the top of this channel, okay? And I think we do that relatively swiftly because, as you can see, 3 days, 7 hours to go up, about 3 days, 7 hours, or 3 days, 8 hours to come down, okay? So that's my idea, that's my trading idea for ETH. Again, I'm gonna set an alarm there at the 382. A little different than Bitcoin. You see, everything's a little different, but there's a lot of similarities. So I'm going to add that. Guys, if you're getting value, please like, share, and subscribe. All right. This is basically my job. This is what I do. This is how I manage positions. It's not about setting a trade and then forgetting it. I wish. Fucking wish. You have to just, especially when your entries are close to your areas of retracement, you have to do all of this to make sure you protect against downside risk. This is part of your risk management. Chainlink. All right, for this, I feel like you've already put in a retracement here with this zigzag. So I'm looking at this. As being a zigzag. So 5 waves up, 3 waves down. Okay, and you can see the 3 waves down hit the 0618, and it also served to retest this W pattern as support. Okay, break the resistance, retest it as support. So all that was done. So there's no functional reason why the price needs to come all the way back down here, and I don't think it will. So now let's zoom into this right here, okay, on the smaller time frames. I'm seeing this as, again, an impulse and a 1, 2, 3 wave move down. But again, it's not going to be as pronounced as in some other assets, so all I do is I'm taking my Fibonacci retracement level from the bottom to the top there. And if I want to protect against any downside here, I'm going to hide behind the phi ratio, the 0.618, which is the minimum retracement or the maximum retracement for any 5-wave move, 3-wave move, right? So if this is indeed a 5-wave move, I think this is the retracement. But then again, this is not a 5-wave move. I don't think this is a 5-wave move. I think this is an A wave. This is a flat correction. Why? Because look, we have the same scenario. Price is telling us that this right here, this level was resistance, resistance, resistance. It was broken. It was never retested. So this is how we're going to trade this. We're going to come all the way back down to the 786. So I think this is a flat correction. It looks like an impulse, but it's a flat correction. So I think we're coming all the way down to the 786. That would be minimum retracement for the flat correction and likely scene of the crime to retest this broken resistance as new support. So I think Link is coming down to about 666. Okay, so that is how I would trade that. So I'm going to set an alarm here for Link. Actually, yeah. A little bit beforehand. Okay, 666. Okay. All right, so that's Link. Okay, just really quickly, if you go into your momentum indicator, you can see your momentum indicator on the 15-minute is coming down, just like these other assets in the hourly time frame. You can see it's bottomed out. So in the time it took for the 15-minute indicator to come down, the hourly time frame can double bottom. Okay, so everything seems to line up with what our indicators are saying as well. This lit entry, guys, I've got such a big watch list. I know it's a lot of work, but this is why we get paid well when things start running. I would not suggest anybody who's just starting out, beginner, even intermediate, have so many active positions. It's just a lot of work. It takes a lot of time, a lot of attention to manage, and if you're not managing them, you're unlikely to be successful. Okay, so for lit, I think what's going on here is quite simple. I think you put in 5 waves up and you're putting in 3 waves down, right? And this is simply one of those 5 waves up, 3 waves down zigzags. So I think you're coming down to this region right here, okay? And this is actually consistent with this inverse head and shoulders retest right here, right at the 618. So about 94 cents thereabouts. Okay, so if I'm protecting against downside in lit, I'm going to hide behind that 0618. Okay, so that's what I see with lit. Okay, Litecoin. I'm also seeing some sort of zigzag here. Okay, starting from about here. So I wouldn't be surprised if you saw this come up in 5 and this come down in 1, 2, 3. Okay, your momentum indicators is telling you as much on the hourly time frame and the 15-minute time frame. So I think that is a high probability read right there. Something like this. Boom, boom, whoops. Boom, boom, boom. Okay. Do we have to come all the way down to the 786? No. Won't be surprised if we find support around here. Right there. Only because of this and that and this, right? There seems to be some support level right there. So yeah, that is what I'm seeing. So if I'm protecting against downside, obviously I want to hide behind the 786, or sorry, the 618. So it would be around these areas, around 71.8, 71.9 that I would hide my stops at for Litecoin. Okay, so that's Litecoin. Okay, MOVR. Okay, this is retesting and double bottoming and, you know, rounded bottom at a high time frame support. Okay, that's what you got down here, and from here you put in 5 waves up, 3 waves down. Okay, that's 5 waves up, 3 waves down to the 0618. Then you go up, and what do? You put 5 waves up, 3 waves down, but you put in what we call a running flat. Okay, so that running flat is boom, 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 where the C wave doesn't come all the way down to the level of the A wave that shows really strong bullishness. So I think that's what you're getting in MOVR, and you should see that in your momentum indicator. Your hourly time frame looks poised to run, and your 15-minute time frame, although it is overbought, I would not be surprised if you sooner than later get some sort of reaction up here. Okay, just because, remember, we're looking for corrections in flavors of 3, and this looks like a 1, 2, 3. Okay, everything you see here should be kind of consolidation reversal for a move up. So don't be fooled. The indicators are not going to tell you the entire story here. I'd be surprised if this broke down here. Okay, so that's what I see with MOVR. And if it does break down it's going to break down in this area to continue this consolidation reversal. But I don't see a severe breakdown beyond these levels. And specifically, what levels am I talking about? I would say beyond this phi ratio, 618. Do you see? You can even see the price is telling you on the small time frames, it's created some sort of, there's reactions around here, reactions here, reaction at the 618, right? You don't only look at the indicator, the Fibonacci, but also look left, look at the historical price action. There is activity here. So if I want to hide my stops liquidations, I'm hiding them below that level. So for, yeah, below around 820 in that area. Okay, so that is MOVR. We're almost there, guys. We're at M. This is all alphabetical. I have so many fucking positions. But this is what I do every day until I don't have to anymore. Because a bull market, it's just, things don't go like this. You know, they go in fits and starts, and, you know, you want to stay alive. It's a game of attrition. Okay, Harmony 1, this is very likely a 5 waves up, 3 waves down scenario. Okay, and this is very, very likely coming all the way back down to this area right here. Why? For a couple reasons. One, you have this inverse head and shoulders with a neckline over here. 2, because if this is a 5 waves up, 3 waves down scenario, you know that a zigzag, the minimum retracement is a 0.5, and you're shy of the 0.5 here. So this is 3 waves up, 3 waves down rather, 3 waves up, and then a pivot. You're coming down to at least the 0.5. Okay, so if I'm trading one, which I am, I want to make sure that my stops are well below the phi ratio at the very least, right? Because we know it can come down to below the phi ratio. So that's that. So I'm going to actually put an alarm here. I'm going to put an alarm at the 0.5. Why? Because that's a minimum retracement. I think whatever happens, it's going to have to tag this. Okay. And again, it's why do we know that it has to come down to 0.5 and it's a zigzag and not a wave 1, wave 2 situation? It's because of the time component, right? If we look at this in terms of time, we see that it's taken about 2 days and 1 hour to go up, in 5 waves, and it's already taken all of 3 days to go up or to go down, right? So there's no parity, there's no relationship in time where there's a one-to-one equal relationship, so it's very likely to come back down. Okay, and our momentum indicators are saying as much on the 15-minute time frame. You see, you're completely oversold, overbought. Okay, so that's Harmony 1. Did I label that? I did. No, I didn't. Okay. All right. Next, we're almost there, guys. We're almost there. I know this is a really long stream. I'm even getting tired, but this is work. This is what we have to do. This is how we manage 25 fucking leverage positions, and we don't get wrecked because we're paying attention and we do this analysis, and just we win. We win so many trades consistently, and taking profit when we need to take profit, and then getting back in and waiting for that big push, that the push where we no longer need to take any types of we don't need to manage anymore, right? That's what we're waiting for, where it just goes and goes and goes and goes, and it's just hands off. We're very, very close. Okay, we're very close. Okay, so this is quite clearly a flat correction. Why? Because you know that this retracement, whatever it is, has already come down below the 0.618. Okay, so maybe it's not that clear that it's a flat correction. Okay, it could still be. It's just holding on to that phi ratio right here. Okay, 5 waves up. I think this is an ending diagonal right here, by the way. 5 waves up, 3 waves down, right at the phi ratio. Okay, and right on top of this. Okay, and this is actually already retested this level. So will this continue up? Perhaps. Okay, because this has come down so low and spent so much time consolidating at this level, both retesting this neckline that was broken as support and sort of fulfilling the retracement of the zigzag, I'm just going to focus on this right here. Okay, so I think now you do this again, same thing. Okay, so that's what I'm going to do with this sort of analysis. I'm going to look at this as a 5 waves up, 3 waves down scenario from here, right here. Okay, so I'm going to say that we're coming back down to this area about 3886. Why 3886? Because again, you see this is resistance, broken as broken resistance, retesting it as support. Okay, approximately around the 618 or maybe the 786. Maybe it's a flat correction. So boom, 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 come back to the 786. Okay, so if I'm setting stops and liquidation points, trying to hide this for RSR, I'm gonna do it around here ish. I'm gonna under all of this because this is significant. Okay, so I'm gonna just check. Yeah, and this is exactly what I've done. All right, moving on. Okay, sand. Very similar to what you're seeing in RSR. Okay, almost exactly the same thing. 5 waves up, 3 waves down around the 0.5618. Then a lot of activity, and you go up and you just do it again. And here, I think we're coming back to this level, right? This level right there. Okay. Basically, you broke resistance. You never retested it as support. You're coming back down. Okay. Now, the question is that the 618 retrace or a 786 retrace? Let's see. I think it's a 786 retrace. Okay. That's a 786 retrace right here. Okay, so for sand, I think it's coming back to 59.66 thereabouts. Okay, same idea, same concept as what we saw in in RSR. Okay, so around there, around 59.66, right there, about momentum indicators are showing us that this is likely on the hourly and on the 15-minute. So if I'm trading this, I'm gonna put an alarm right about here. Okay, let's see. Let's see. Yeah, let's do this. Let's put an alarm there. Okay, what happened to the music? Okay. All right, so yeah, this is what is good to do. Okay, let's see. Okay, there we go. Okay. All right. SHIB. Okay, this is very likely some sort of flat correction here, because we came down all the way down to the 786. Okay, so this correction, counter correction down to the 786 is a flat correction. We come up now, and so we're just going to focus on this right here. And this counter correction, which it looks like we're getting now. I'd say it starts about here. It's very likely another flat correction. You typically see that, just repeats, and see the 786 is confluent with all of this activity that has yet to be retested because it was broken. Now it's going to be retested. Okay, so that's what I'm seeing. I would say you come around the 1049 area for SHIB. So if I'm hiding my stops, liquidations, it's going to be down here somewhere. Okay, so that's SHIB. Okay. Synthetics. Okay, so here It's very clearly 5 waves up, 3 waves down situation. In terms of whether it was pure or corrective, let's see. 2 days up, 2 days down. Looks pure to me. 2 days up, 2 days down, right there. Okay. And right here, I think you're doing some sort of consolidation reversal here. Yeah. Absorbing all of this supply. So perhaps this is first degree, second degree zigzag, and this is now your pivot like this, perhaps. Let's see. Let's zoom in. Okay, I think this was the pivot already put in right here. Right here. I think this was the pivot that you put in. Right here. Okay. You might have started already with the pure impulse here. Would not be surprised if that was the case. Okay, you're looking like you're coming down with the 15-minute time frame, but not in the same way that other assets are. Hourly time frame, momentum indicator, you're cross bullish and you're looking like you're making some moves. So yeah, synthetics doesn't seem to me like it's coming down much from here, just based off of all of this. All of this. Which, again, we can channel. Okay? So if you are coming down, I'm coming down here. And so if I want to hide my stops, liquidations, and synthetics, I'm going to hide it, actually, more technically, under this. Let's see. I'm going to use this. I'm going to hide it under the phi ratio here. Okay, so under 267 thereabouts, something like that. Okay. So that's synthetics. Telcoin. Again, this is a really nice move. Just, whoops. Upon first glance, I'm seeing a big channel, and I'm seeing that you're at the bottom of a channel, and you've triple bottomed at the bottom of a channel. That's the first thing that jumps out at me. Okay, there's a channel, there's been some consolidation, and you've triple bottomed on the bottom of the channel. So it's likely that you're moving your way up in the channel. That's what I'm seeing with Telcoin. Okay, my momentum indicators on the 15-minute time frame, look, it's about to cross bullish. Do you see what I mean? Like, don't be a slave and prisoner to your momentum indicators or to any indicators. Look at price action first. Use the indicators corroboratively. It's a good habit. Because if I'm just, using my indicator and I'm looking at all my indicators and maybe the indicators on, overbought, then I'm probably not seeing this. And you're not getting into the habit of seeing these patterns. So yeah, Telcoin looks like it's raring to move. Tron looks similar. Okay, first thing I see is a channel. Okay, and now you're at the top of the channel. Are you going to come all the way down? Let's see. Okay, so the way I'm reading this is Okay, I'm reading this as an A wave, as a B wave, as another flat correction right here, and perhaps I'm reading this as... Ooh, this is tough. This could either be a flat or a zigzag. Okay, if I'm really careful, I want to protect against coming all the way back down to the bottom of this channel. Okay, so I'm going to hide my stops, and I'm going to have my stops. Basically, I'm going to treat this worst case scenario. Worst case scenario, this is a flat correction, so I'm going to guard against a flat correction retracement, which is around 6437. Okay, so that would be Tron. Okay. Yeah, that's how I would play that. Let's see. Okay. All right, so that's Tron. And Vet, we're almost at the end, guys. We're almost at the end. Juan says BTC. Yeah, I've been going for hours, Juan. Hours. This is one of the longest streams I've ever done. Just rewind. You'll see BTC. I treated BTC extensively at the beginning of the stream. I'm glad to almost be done. I'm not just going for my health. You know, I'm protecting positions. I'm managing positions. But I'm a little weary, so I'm happy that this is, you know, the end of the stream, nearing the end of the stream. Okay, I'm going to take all of this as a zigzag. 5 waves up, 3 waves down. Okay, boom, boom. We hit the 0618. In doing so, we're retesting a crucial level of resistance flipped into support. Okay, you had this inverse head and shoulders breakout, retest. Okay, so there's no functional reason to come all the way back down here. Okay, so that's the first thing I want to say. Next, I'm just going to focus on here for VeChain, and if I'm doing that, I'm seeing okay, I'm seeing this. Similar to a lot of other assets that we've been looking at. This was some sort of resistance, finally broken, retested here. Okay, but I think it's going to be retested once again. Okay, that's what I'm seeing. And if you want to be more precise, you look at this as some sort of zigzag where you go up in 5, come down in 3. Ooh, this was fulfilled. So I don't know that you come back down, to be honest, with VeChain. It looks like it put in 5 waves up, 3 waves down. It could come back down to this level, but it doesn't have to. Okay, so this I'm kind of on the fence about. Could come back down to this level, but it doesn't have to. Okay, the 15-minute momentum indicators overbought, but don't be surprised if it continues to consolidate up at this region. The hourly time frame momentum indicator is cross bullish, and it's oversold. So again, my conclusion with VeChain, it could come all the way back here. I think that's the worst case scenario. It comes down to around 2.29 cents. Okay, 2.29 cents. But all of this stuff is going to prove to be good support for the price if it does indeed choose to come down to these levels. Okay, so that's how I'm reading VeChain, and that's how I would hide my stops and liquidations. Okay, XRP, we're getting to the end. Okay, I think there's Z. X is not the last letter. I'm tired, guys. Guys, if you're getting value, please like, share, and subscribe. I would do this anyway because this is my job. This is what I do. I have to manage my positions. I'm a trader. I'm trading a bunch of different assets in the cryptocurrency space. But I like to share my work. I think education is key. If you're able to educate yourself and, put in the work, this is where really you can leverage that into life-changing wealth. And that is, I think, the beginning of a lot of great things. Okay, for XRP, I'm looking at this as some sort of 5-wave up, 3-wave down scenario. And I want to say that we're starting here and we're ending here. And if we come back down, we're coming back down here. Okay, so I'm seeing this right as being our 5 waves up and our 3 waves down. Okay, and this would be a retest of this area right here, which is the midline, which was great resistance and also the neckline of this pattern right here. Breakout, retest. Okay, so I am seeing XRP come down to this area around 36.5. Okay, so if you want to hide your stops, liquidation points, I would hide it a bit below here. Okay, a bit below here. That's it. So that's XRP. Okay, and last but not least, guys, we're finally here. Zilliqa. It's really, like, doing all this is a testament of strength, endurance. It's a game of attrition. Being exposed to the market is a game of attrition. Whoever can stay and maintain focus and do this for long enough wins. Okay, so you go up in 5, you come down in 3 with Zilliqa. Question is, was that sufficient? So I take my Fibonacci retracement tool, and if this is purely impulsive, then that should be it, right? We should be able to see that took 1 day, 22 hours, and then the retracement took 1 day, 2 hours. Yeah, I don't know about that. Here's what I think. This is a zigzag. 5 waves up, 3 waves down. This was A. All this is B. This is your pivot, and you're coming back down right here, at least to the 0.5. If you want to hide behind the 0.618, right? So I think that around 2.4 cents is where a stop should be for Zilliqa. So that's what I'm seeing with Zilliqa. So if I'm trading this, which I am putting my stops, or I'm putting an alarm at this point right here on the 0.5, because the 0.5 is the minimum retracement for a Fibonacci, for a zigzag, right? So I'm gonna edit this and I'm gonna say buy ZIL. What am I doing? Buy ZIL. There we go. So that's what I'm seeing. Let's take a quick look at these indicators. The 15-minute indicator saying yes, indeed, it's likely that we do experience some sort of retracement, some sort of some sort of pullback at this point. The hourly time frame is agreeing, because the hourly time frame is kind of moving up, but not much is happening. Do you see what that is? What that's doing? So yeah, and also just look at this on the hourly time frame. Look at this. You see this? Inverse head and shoulders. Broke up. It never retested it. And that retest would happen right at the 0618. You see that? That's confluence. That is my favorite type of confluence because it's simple support and resistance confluence. All right, guys, that's it. I got nothing else. I hope this was helpful. I hope this was useful. I know it was long, but I hope you got some value from it, however long you watched or listened. Like, share, and subscribe, and I'll see you tomorrow. Take care. Bye.